Hey guys, it's Hannah. Welcome to the weekly market wrap-up. This is what mattered to us this week. Not a whole lot going on in the markets this week, and it is pretty evident that Americans needed a holiday, as Independence Day on Thursday caused for a truncated schedule for Wall Street. Very light trading occurred on Monday and Tuesday, and there were only gains by the equities sector, pretty minor, with the S&P 500 barely changing to close at 1615. The Dow Jones added 56 points though, but still under the psychological 15,000 mark at 14,988. Some big news out from Yahoo this week that was pretty devastating: 100% drop in crude oil. Whoa, wait, what was that? Seriously, Yahoo, you may want to proofread your ticker tape before you head off for the long weekend.
When they close a road, they put up big signs, like this one. Ah!
As we head into the session after Independence Day, three major international headlines continue to dominate investor fears. Instability in Portugal's government, which directly affects the health of the European Union's economy. Escalating turmoil in Egypt, and continued weakness in Chinese manufacturing data, which is of particular concern of American and Japanese businesses. We don't have any winners and losers this week, so we've decided instead to take a technical look at the international stock markets. For the British FTSE, despite being up over 3% year to date, this is in context of a broadening downtrend, which has been in play since the middle of March. Wednesday's close leaves the index dangling precariously above the 200-day moving average, and any more bearish news out of Europe could send the FTSE tumbling. For the German DAX, it has proven to be a volatile year, with the high-low spread in the index measuring 14%. At current valuation, the DAX is near break-even year to date and looks to be positioned for further declines, as supported by weakening momentum indicators. For Japan's Nikkei, it cleared the all-important 14,000 mark and is one of the few major markets that is positioned in an uptrend. However, there has been some hesitation in moving beyond this marker, and a failure to decisively clear at least 14,500 points could spell near-term volatility. A little bit closer to home, let's take a look at the S&P 500. While the index did well to recover the 1600 mark, this is occurring in the context of a sharply declining broadening wedge pattern, which portends further near-term bearishness. The index must clear 1650 points in order to break this downtrend, although volatility in the international markets is making investors very nervous. Over to precious metals. Gold managed to stop its decline to commodities purgatory by closing above $1,250 per troy ounce. But it has a long way to go from here. One small comfort in this awful year for precious metals is that while the price action has continued to make new lows, the momentum indicators have failed to do just that, which does suggest that we may be seeing a bottom in this market. And with the focus of domestic investors on job growth and international bearishness, the Federal Reserve may be forced to continue their QE program longer than expected, which is good for gold. Silver also managed to step on the brakes after dropping to $18 territory. Currently, the spot price is at $19.68 per troy ounce. The same divergence between price action and momentum can be observed in the silver market as well, although it being the more volatile metal means that investors should be especially cautious given uncertain international events. My personal favorite, palladium, had a strong day on Monday, moving up nearly 4%, which has now placed the metal within 2% of closing above its 200-day moving average. Despite a volatile month of June, palladium continues to be the strongest performing precious metal by far. We expect the metal to continue its run in the long term, although this metal, like any other financial asset, is susceptible to some of the instability witnessed in the international markets. And that wraps it up. We know you want to get on with your long weekend, but don't leave before you hit that subscribe button. And you can email me at hannah@ViralNetworkNews to email me what you love and you hate. Thanks for watching. We'll see you next week. For VNN, I'm Hannah Bernard.